According to the mainstream press, Boris Johnson's declaration to campaign for Britain to leave the European Union has triggered market panic headlines right across the mainstream press spectrum that demonstrates the magnitude of the depth of their ignorance of markets, all from the likes of the BBC to Channel 4 News to a myriad of dying broadsheet publications, including the FT, all in unison propagating headlines such as Boris Johnson causes a run on the pound, that followed a 3-cent dip against the US dollar on rising Brexit fears, as though this was catastrophically bad news, though conveniently ignoring that the fact that the FTSE actually closed higher on the so-called Brexit panic Monday. This despite the same clueless press only a few weeks ago reporting on the likes of Japan implementing negative interest rates in an attempt to push the Japanese yen lower, as each nation is engaged in competitive devaluations against one another's currencies so as to boost domestic demand by means of importing inflation and exporting deflation in what is commonly termed as the currency wars. Therefore, rather than panic, instead Britain has effectively won a battle in a raging worldwide currency war, all without implementing any panic monetary tool or economic policy, which is set against the other central banks right across the Western world, from Switzerland and to the whole of the Eurozone bloc, and most recently Japan, cutting their interest rates to below zero in panic attempts to push their currencies lower. Therefore, a fall in sterling is good economic news, for the further sterling falls, the greater the economic boost it generates. So whilst nations such as Japan, the Eurozone, and recently Japan are starting to effectively deflate, instead Britain is inflating, creating even more jobs and economic growth. And this once more illustrates why most people tend to lose investing or trading, because over 90% of that which they are exposed to is written by pseudo-analysts, pseudo-economists, pseudo-traders, because in reality they are just journalists who are good at writing copy for publication, but in reality, as this week illustrates, just do not have a clue, never had and never will, which is why they tend to miss whole bull and bear markets. In terms of the technical chart picture for the British pound against the dollar, yes, sterling is clearly in a bear market, but the worst of the sell-off was over a year ago, since which time sterling has been fairly stable, which implies rather than the current sell-off marking the start of a new panic sell-off stage, instead the downside appears very limited, and probability actually favouring sterling being nearer to 20% higher a year from now, rather than the 20% lower, as the clueless mainstream press has been busy propagating all week. And where the EU referendum is concerned, then my opinion remains that this is Britain's very last chance to vote for freedom from an emerging European superstate, as the following two recent videos illustrate why a Brexit, whilst it will be economically painful, despite all of the benefits of being outside the EU, it will cost anywhere from 2% to as high as 5% of GDP if the Eurozone is determined to make an example of Britain, to act as a warning to others by raising punitive tariffs on trade. However, remember that attaining freedom always carries a price, in which respect even the worst case scenario for a 5% loss of GDP in the grand scheme of things does not compare against the infinitely greater price the people of Britain paid for their freedom in both past world wars. And so it is now this generation's turn to pay a price for the freedom of future generations. Therefore, what the people of Britain need to fully realise is that this really is their very last chance for freedom. And do click on the videos for greater depth on why Britain should vote to leave the emerging European superstate before it starts to implode.